Hello viewers, welcome to my channel. I'm Hasham. So far 5 problems I've completed on computing the income from business or profession. Now in this video 2 more problems I'm going to start, that is 6th and 7th problem. So after completing 5 problems, if you have watched all the problems, definitely you are in a position to attempt the problem how to compute the income from business and profession. So Income Tax Act has given provisions regarding the computation of income from business. What are the items to be allowed as deduction and what are the items to be disallowed as deduction? So all these I have explained you in the first 3 videos on theory regarding computation of income from business. So if you want the complete knowledge, watch all the theory videos, be perfect about the provisions, then you will start the problem. So before starting the problem number 6, I expect my viewers to have a printout of the problems which are given in the link under my description. Take the screenshot of the points, then I'll explain all the points in detail. Now, see the 6th problem. Problem number 6. From the following profit and loss account of Sri Vidyanand cycle manufacturer and also dealer for sale of lottery business, compute income under the head profits and gains of business or profession for the year ending 31st March 2022. Here profit and loss account is given. So first of all, we'll begin with net profit as per profit and loss account. It is given net profit as 1,65,200. So 1,65,200, that is the profit as per profit and loss account, 1,65,200. Now add inadmissible expenses. Inadmissible expense means those expenses which are not allowed by Income Tax Act but already debited to profit and loss account. So we add back. Now first item, salary to employees allowed, advertising expenses allowed, general expenses allowed, entertainment expenses allowed, bad debts allowed, drawings are debited to profit and loss account. Income Tax Act says drawings will not be allowed as deduction, disallowed. So drawings 8,000 I have taken. Next, goods and services tax, GST, allowed. It's a tax of the business. Then interest on capital, disallowed, specifically given by Income Tax Act. Interest on capital is disallowed, 2,000. Next, repairs allowed. Patents acquired. Actually, patent is an intangible asset. It is a capital expenditure. When patents are purchased, it's a capital expenditure. Only revenue expenditure are allowed. Capital expenditure are not allowed. So first of all, patents which are debited to profit and loss account will be disallowed. 28,000 add back. But Income Tax Act says patents is eligible for depreciation. The depreciation at the rate of 25% on patents purchased will be allowed as deduction. So first of all, whatever patent purchased, disallowed, 28,000 will be added back. On this 28,000, depreciation at the rate of 25%. So 25% of 28,000, 7,000 is the depreciation on patent that is allowed. So here you can see expenses and losses allowed as per IT rules. So here you can see depreciation on patents, 25% of 28,000, 7,000 allowed. That is a new point. Next comes legal expenses allowed. Income tax disallowed. Income tax debited to profit and loss account disallowed, 4,500. Bonus paid to employees allowed as deduction. Bonus to proprietor, salary to proprietor or bonus to proprietor disallowed. So bonus to proprietor 4,000 disallowed. Now computer purchased, hardware 76,000, computer expenses, software 8,000. Income Tax Act says computer, whether hardware or software, is a capital expenditure. It should not be debited to profit and loss account. Here it is debited, hardware and software, 76,000 plus 8,000, 84,000. So 84,000 debited to profit and loss account disallowed. So here computer hardware 76,000, software 8,000. But Income Tax Act says depreciation at the rate of 40% is allowed on computer hardware as well as software. So here deductions as per the IT rules. Depreciation on computer hardware and software, 40% of 84,000. You add up 76 plus 8, 84,000. 40%, 33,600. Whenever I explain some important provisions, always note it down. Keep a notebook, pen, calculator ready, because so many provisions are there. If you simply listen, you cannot be able to remember. So always make the notes, write it down, all the important provisions I am explaining. So 40% is the depreciation on computer, hardware and software. Then printer for computer. The printer for computer, that is a capital expenditure, just like computer, hardware and software, disallowed. So here computer printer 12,000 disallowed. But income tax act says printer will come under machinery, and depreciation allowed on machinery is 15%. The 15% depreciation is allowed on computer printer. So here you can see depreciation on printer, 15% of 12,000, 1,800. All these percentages will not be given in the problem. You have to remember, on patents acquired, 25% depreciation. On computer, hardware and software, 40% depreciation. On printer, 15% depreciation. Next, donations. Specifically, Income Tax Act has given donations are not allowed as deduction, disallowed, add back. So 5,000 donation disallowed, right? Next, after donation, printing and stationery allowed, postage and telegram allowed, telephone allowed, provision for bad debts disallowed. Bad debts are allowed, but provision for doubtful debts are not allowed. So provision for bad debts 4,000 disallowed, add back. Then fire insurance premium allowed. Fire insurance premium for goods allowed. To contribution to scientific research to Delhi University. Income Tax Act says scientific research contribution made to a university or an approved educational institution, the deduction will be fully allowed. 100% deduction is allowed. So here 10,000 rupees are contributed to Delhi University for conducting the research. Income Tax Act says it is fully allowed as deduction, nothing to be given. And all these points you have to write in working notes after completing the problem in examination, after finding out the income from business. After finding out income from business, then you should write down, this is the income from business. Then you should write down the working notes. In working notes, contribution made for scientific research to a university, fully allowed as deduction. Then interest on loan, if the loan is taken for the business, it is allowed as deduction. Then apprentice training expenses, it is also fully allowed as deduction. That's all. Debit side, we have seen all the items, right? Now credit side, you see. Credit side, by gross profit. Then interest on securities. Actually, interest on security is taxable under income from other sources. It is not taxable as a business income. So interest on security 10,000 deduct, incomes taxable separately 10,000. Similarly, income from house property. This income from house property is not a business income. It is separately taxable under income from house property. So deduct income from house property 12,000. Next comes bad debts recovered allowed earlier. If during the current year some bad debts are recovered, we have to see whether it was allowed earlier or not. If it is allowed as deduction earlier, then this bad debt recovered is a business income, nothing to be done. So here it is given bad debts recovered allowed earlier. Simply it is a business income, 5,200, nothing to be done. In working note you should write down bad debt recovered is a business income because it was allowed as deduction earlier. That's it. No adjustment. Sale of building. Sale of building is a capital receipt. It is not a revenue income. So sale of building should be deducted. 1,52,000. Next, winning from lottery, part of the business activity. Income Tax Act says winning from lottery is taxable under income from other sources, even if it is the activity of the business. If the business activity is to purchase the lottery tickets, if the lottery tickets is won, then it is taxable under income from other sources. So we deduct income from lottery, deduct. Then comes compensation. Compensation received from an employee for leaving the job without advance notice. There will be agreement between the SSC and the employee that without notice, if the employee is leaving, they have to pay compensation to the employer. So here compensation received, Income Tax Act says. When remuneration is paid to employees are allowed as deduction. So compensation received from the employee is a business income. So nothing to be done. Already it is included in the profit. In this profit already included that compensation received from the employee. It's a business income. Nothing to be done. So in working note you should write down compensation received from the employee is a business income. Right? That's all. Credit side, all items we have seen. Now see the adjustments. In adjustments, out of the advertisement expenses, 1500 were spent on neon sign board. Now advertisement expenses debited are 7,000. 7,000 rupees advertising expenditure debited to profit and loss account. In that 7,000, 1,500 are the advertisement expenses on neon sign board. It's a permanent board. So Income Tax Act says expenditure incurred on neon sign board is a capital expenditure, disallowed, not allowed as deduction. Revenue expenditure on advertisement is allowed, but capital expenditure on advertisement disallowed. So neon sign board 1,500 disallowed. Capital expenditure on advertisement, neon sign board 1,500 disallowed. And Income Tax Act says this neon sign board will come under furniture. And on furniture, depreciation allowed is 10%. So Income Tax Act says neon signboard is a capital expenditure, it is disallowed, so add back. But on that neon signboard, 10% depreciation is allowed. So 10% of 1,500, you can see here. Depreciation on neon signboard, 10% of 1,500, 150 is the depreciation allowed. First adjustment over. Second, rupees 1,000 were spent on purchase of land are included in legal expenses. P&L account debit side, you can see legal expenses are how much given here? Legal expenses are how much? 8,000. Legal expenses 8,000 are debited to profit and loss account. In that 8,000, 1,000 are the legal expenses paid on purchasing the land. So this legal expense on purchasing the land is a capital expenditure related to land. So it is disallowed. So here legal expenses on purchase of land 1,000 disallowed. Right? Next one. Half of the repair expenses were on let out building. How much are the repairs debited? 1,000. 1,000 repairs are debited to profit and loss account. 50%, half is related to let out building. That is not allowed. Only business expenses will be allowed. So 500 rupees repair of residence, let out building will be disallowed. Repairs to let out house, 500 disallowed. So how many adjustments we have done? 3 adjustments. 4. Mr. Vidyanand is having enough money. In spite of that, he took a loan with interest. Income Tax Act will not interfere into the internal affairs of the business. Income Tax Act will not teach the businessman how to run the business. It is the SSC's business. He can decide whether loan is required or not. The income tax officer cannot interfere and say, why you have taken the loan? You are having enough money? No, he cannot interfere. That means if no law can prevent the SSC from taking the loan for the purpose of business, whether he is having enough money or not, immaterial. So here Vidyanand is having enough money but still he has taken the loan, ignore. In working note you should write down, no law can prevent the SSC from taking the loan for the purpose of business. It is immaterial whether the business is having money or not. During the inspection of the books, it is found that investments purchased 4 years ago is understated by 70,000. So while searching, income tax comes to know that there are some investment which are understated by 70,000 4 years ago. Income Tax Act says now it is found, it is taxable income. Understatement of investment is taxable whenever it is found. So current year it was found, it was understated 70,000, it is taxable. So understatement of investment 70,000 add, that's it. Next comes seventh point, last point. During the previous year, 5,000 rupees is advanced to purchase the raw material to a supplier who is absconding from the country. Bad debts. Rupees 5,000 advance given to the supplier for supplying the material, but he has not supplied. He is absconding from the country, nowhere found. So this 5,000 rupees is a loss. Income Tax Act says it is allowed as deduction. So here 5,000 advance to supplier, loss 5,000 rupees, allowed as deduction. All the points. Debit side, credit side, adjustment, every point I have explained. Now check. The total of the addition items, inadmissible items are 154,500. Now add up. 1,65,200 plus 154,500, 319,700. From 319,700, deduct the incomes which are credited to profit and loss account but taxable separately, not taxable under business income. These are the four items. Take the total of these four, 2,14,000, subtract, minus. So 319,700 minus 214, 105,700. From this, deduct all expenses and losses which are allowed by income tax rules. So what are those? Advance to a supplier, it's a loss, allowed as deduction. Depreciation on neon sign board, then depreciation on computer, hardware and software, depreciation on printer, depreciation on patents. All these are deductions allowed. Take the total, 47,550. Deduct 105,700 minus 47,550, you get 58,150. From this to this, we add the understatement of investment by 70,000. Add up. 1,28,150. This is the income from business. That's all. So I have explained all the points. Remember, whatever provisions I have explained, all those provisions you have to write in working note in examination. Particularly, compensation received from the employee, it's a business income. Bad debts recovered, which was allowed as deduction earlier, now it is a business income. Whereas interest on securities, interest on security income from house property, not a business income, deduct. Similarly, sale of building is a capital receipt, not a business income, deduct. Winning from lottery is taxable under income from other sources, not a business income, deduct. Patents purchased is a capital expenditure, disallowed, whereas depreciation 20% allowed, 25% allowed. Computer hardware software, capital expenditure, disallowed, then 40% debt, like that. Come on, next. Problem number 7. The profit and loss account of Mr. S. Vidya Sagar Haridwar is as under. Compute the income from business and tax liability for the current assessment year if deduction under section 80C is 72,000. After computing the gross total income GTI, from that GTI deductions are allowed under section 80. So one of the deduction is 80C for qualified saving. So 72,000 deduction is available. Now only profit and loss account is given, no adjustments are given. So debit side, how much is the net profit? 2,61,300. So I have taken 2,61,300 as the profit as per profit and loss account. Now inadmissible items, debit side. Salary to staff allowed, staff welfare expenditure allowed, goods and service tax allowed, general expenses allowed, bad debts allowed, reserve for, oh sorry, I am reading out 8th problem, sorry, I'll come back to the 7th problem. 7th problem, to payment to staff, salaries allowed, allowances allowed, bonus allowed, perquisites allowed, advances. Advances given to employees is not an expenditure, disallowed. So advances, payment advances 21,000. Taxes, municipal taxes, business license fee. It is the business license fee. It is allowed as deduction. Income tax advance, not allowed. 4,000 income tax advance, disallowed. GST, goods and service tax, 11,000. It is allowed. GST payable, now there is a law. Regarding taxes paid it is allowed. But if tax is payable, Income Tax Act says it is not allowed. If it is paid before filing the return of income, then GST payable is also allowed. But here it is not given whether GST is paid before filing the return or not. It is not given. So we make the assumption that GST was paid after closing the accounts but before filing the return of income. So GST payable is allowed. On that assumption we are allowing. If it is given in the problem that it was not paid even before the filing the return, then it is not allowed. Then scientific research in home, revenue expense, capital expense. Regarding expenditure on scientific research, Income Tax Act says, if the research is related to the business, then revenue expenditure and capital expenditure on scientific research is fully allowed as deduction, except land. Except land, all expense, revenue expense, capital expense on scientific research within the business, it will be allowed. So 5,000, 30,000 allowed. To outsider, sometimes the business will not conduct the scientific research, they will themselves. They will contribute for scientific research to outsider. Then Income Tax Act says, if the contribution of scientific research is given to a university or educational institution approved, then it is allowed as deduction. If it is given to a scientist, it is not allowed as deduction. So here contributed, scientific research contribution to a scientist, 20,000, disallowed. This 20,000 is disallowed. Whereas the contribution made to Amaravati University is allowed as deduction. Fully allowed, nothing to be done. Then termination of agency. Many a times the SSC will have an agency. That there is a termination of agency, they have paid some amount. It is a revenue expenditure, allowed as deduction. Club admission fee to manager. Nothing is given regarding the club admission fee, whether the club membership is for personal purpose of the manager or for the business purpose. Many a time what will happen, many business meetings are conducted in the clubs. So in that case, the manager will conduct the meeting in the club. So membership fee paid for the manager by the SSC is for business purpose. It is allowed as deduction. So here we assume that the manager has become the member for the purpose of the business. It is allowed as deduction. Membership fee of traders association, that is also allowed as deduction. Then fines. Fines for adulteration. Remember, adulteration is crime. It is in violation of law. The law says you should not make any adulteration of any product. If adulteration of any product is made, then it is in violation of law, not allowed. This fine for adulteration 3,000 is disallowed. Whereas fine paid for late delivery of goods, this is a trade fine. Sometimes we deliver the goods lately. In that case, some fines are applied. It's a contractual fine. It's a business fine. It is allowed as deduction. Next comes payment to competitors for acquiring the business, competing business. It's a capital expenditure. Payment made to a competitor for acquiring the competing business. We are purchasing the business. It's a capital expenditure. Disallowed, 75,000. Then for not to sell a product in his area, we are paying some amount to our competitor, telling them not to sell that product in our area, because if they sell in our area, our sales will come down. So this is a revenue expenditure. It is allowed as deduction. Speculation business expense. This SSC is having two business, non-speculation and speculation. So first we are computing the income from non-speculation business, right? So this speculation business expense 1,80,000 disallowed. 1,80,000 disallowed. Next, depreciation. Depreciation on business assets allowed. Depreciation on assets at the residence of the employee. But that means some of the assets of the business are at the residence of employees. It is allowed as deduction. And on the assets at the residence of owner, the Income Tax Act says if the assets are with the owner, then the depreciation is not allowed. So depreciation on assets of owner. Next, rent of the own premises. Actually, if rented premises is there, then rent is allowed. Rent of own premises does not make any sense because the premises belongs to the owner. There is no question of rent. It's a notional rent. So disallowed. Rent of own premises 30,000 disallowed. So all the items debit side we have seen. Now credit side. Gross profit, then interest from customers. Sometimes the business will charge interest from the customers because the customers have not paid the amount on time. It's a business income. Nothing to be done. It's a business income. In working note you should write. Then interest on advances to employees. Sometimes advances are given to the employees and interest is charged from the employees. Again, it's a business income. Nothing to be done. Then interest on bank deposit. It is taxable under income from other sources, not business income. So here income showed under other heads. Interest on bank deposits 13,200. Next comes rent received. Actually, rent received is taxable under income from house property, not from income from business. So deduct. Rent received 12,500. Next comes bad debts recovered 7,000. Out of this, 3,000 is disallowed earlier. Previous problem also I told you. If it was allowed as deduction earlier, now recovered, it's a business income. Nothing to be done. But if it is disallowed earlier, now it is recovered, it is not taxable. So out of 7,000, 3,000 was disallowed earlier. So now that 3,000 is not a taxable income. 3,000 is not a taxable income. So bad debts recovered to the extent disallowed earlier 3,000, not a business income. Deduct. Next, gross profit from speculation business. So gross profit from speculation business is not a non-speculation business activity. Separately, so we deduct. It is credited to profit and loss account, so we deduct. Gross profits from speculation business 3,30,000. We have taken all the items, debit and credit. Now take the total of the debits inadmissible expenses 3,50,000. Add up 261,300 plus 350, 6,11,300. From this deduct incomes which are taxable separately, that is 3,58,700. Deduct 3,58,700, you will get 2,52,000. This 2,52,000 is the income from non-speculation business. He is having two businesses, non-speculation and speculation. Non-speculation gross profit we have deducted, and non-speculation expenses, speculation expenses business, non-speculation, it is speculation business expense is 1,80,000. The speculation business expense are added back and speculation gross profit deduct. So we got non-speculation business income. Now separately we have to calculate speculation. Income from speculation business. Gross profit from speculation business is 3,30,000. From this 3,30,000, expenses on speculation business will be deducted. How much is the expenses on speculation business? 1,80,000. So 330 minus 180, 1,50,000 is the income from speculation business. Non-speculation business 250 to 600. Speculation business 1,50,000. Now income from house property. Actually income from house property we need GAV, gross annual value, municipal rental value, fair rental value, annual rental value, but here nothing is given in the problem. Only rent received is given. So rent received itself is the GAV, gross annual value. Municipal taxes are not there. So NAV is also same, 12,500. From that one compulsory deduction, standard deduction is given under section 24A, 30% of NAV. So 30% of 12,500, 3,750 is the deduction, standard deduction. Deduct will get 8,750 as income from house property. So we got non-speculation business income, speculation business income and income from house property. Now we compute the total income. So business income, non-speculation business income 250 to 600, speculation business income 1,50,000, income from house property 8,750 and income from other sources. Income from other sources. Income from other sources consists of interest on bank deposit. I already told you here income from interest on bank deposit is taxable separately under income from other sources. So here interest on bank deposit 13,200. Now we add up all the incomes. This 2,52,600 plus 1,50,000, 8,750, 13,200, 4,24,550. This is the GTI, gross total income. From gross total income, deductions are allowed under section 80. So one deduction is deduction under section 80C, that is given in the problem. First paragraph it is given. Deduction under section 80C is 72,000. So here deduction under section 80C 72,000 in bracket. Bracket means subtraction. We have to deduct. Secondly, deduction under section 80TTA. This 80TTA deduction will be allowed whenever an SSC is having interest on bank deposit. Interest on bank deposit. So how much is the deduction? Least of the following two. Actual interest received or 10,000, whichever is less. So how much is the actual interest received? Actual interest received is 13,200. So 13,200 or 10,000, whichever is least, that will be allowed as deduction under section 80TTA. So it comes to 10,000. So bracket 10,000. These two items we have to deduct. 4,24,550 minus 72,000 minus 10,000. 3,42,550. This is the total income. Now it is asking you to calculate the tax liability. The tax liability is nil because the total income is below the basic exemption limit. Below the basic exemption limit of 5 lakh. Actually, 2,50,000 is the basic exemption limit. But if a person is having income up to 5 lakh rupees, tax rebate under section 87A will be given to the extent of basic income tax or 12,500. Our basic income tax will be less than 12,500. So the tax liability of the SSC will become nil because his income is up to 5 lakh rupees. So by availing the benefit of tax rebate under section 87A, his tax liability will become nil. That's all. So in this video, I have explained you two problems, that is 6th and 7th. In every problem, you are coming across a number of new points. So if you want the complete command, write it down, whatever new points we are covering in every problem. And apart from that, in examination, if you simply compute the total income, that is not enough. You must write the notes, working notes, whatever explanation I am giving. All these things you have to write in working notes. Inshallah, we'll continue the next problem in the next video. Give a like to the video. Share my channel. Subscribe if you have not yet subscribed. And buy the super thanks which is given below my video. Inshallah, we'll continue the next problem in the next video.